the word that drives me nuts, and I even catch myself saying it, but uncertainty.
Oh, yeah.
When they're like, this is so uncertain. Like, okay, different choice of word because we've been saying uncertain for forever.
Years.
And the reality is, we did a podcast on like things you should be doing to set your life up. Guess what? Life's uncertain. So Kelli, what happened in Q3? What do you remember?
Are you kidding me?
This quarter has been, well, at least third quarter. I'm not going to write the fourth quarter when we don't know.
Yeah.
But everything that you would probably hear people say coming into the third quarter was proven wrong.
And let's hear, like, what were some of the things you were hearing?
So like, now I'm like getting irritated because there's this word out there that really drives me nuts and it's all over. And I don't know why it irritates me so much.
Because everything irritates you.
This is a good one. This is my vent session. So the word that drives me nuts, and I even catch myself saying it, but uncertainty.
Oh, yeah.
When they're like, this is so uncertain. Like, okay, different choice of word because we've been saying uncertain for
forever.
And the reality is, we did a podcast on like things you should be doing to set your life up. Guess what? Life's uncertain.
Yeah.
It's always going to be uncertain. There's nothing. I guess you could say sometimes or certain periods they have lower clarity going forward than.
Well, what's a better word than uncertain then?
It lacks clarity. I don't know.
You already said that.
I don't know. Pick one. How about don't say it at all? And just
what else were clients saying? Like what else was proven wrong?
No clients were saying uncertain. I'm kind of picking on like media headlines a little bit here. That so one.
I'm going to push back on that. Clients are definitely thinking it's uncertain and it's definitely out there.
But ask them where they got the idea of being uncertain.
Well, I know where they got it, but I'm just saying,
loop.
Yeah, but there is a sense of uncertainty out there that is across our client.
Yes.
Yeah.
I would say it's across everywhere. Like people are uncertain. Yeah. They get bombarded with a lot of information every single day. It's very hard to process it. And when it's just pointing to constant things to nitpick at, it's uncertain.
Yeah.
But I don't know if I have a better word, but I'm like, quit describing investment markets as uncertain. They're always uncertain. That's why true. That's why you get paid.
Yeah.
To take risks because that's uncertain.
Okay.
If everything was certain, it'd be boring, right? I mean, the returns would be really low because everybody would know what to do.
Yeah. Okay. So what else happened in the third quarter?
Sell in May, go away didn't work.
What does that mean?
Okay. You've never heard that saying?
No.
Oh my God.
I'm not a finance dork like you.
Okay. So like once in a while this comes up, people will be like, yeah, historically, like you ever heard the saying sell in May, go away? Like this was always it's not always a thing, but historically, like summer's coming on, low trading volume, like things are just not like there's not as many market participants. So sell in May, go away. And in fact, like
when you say go away, like what does that mean? I'm actually.
Well, it could mean a couple of things. One, sell in May, go on vacation, come back in the fall.
Oh, and then like, okay.
And then start investing again, which is like summer's typically a lull in meaning a lull in trading volume. But sell in May, go away. It could also mean you just go away from the stock market for a while.
Got it. Okay.
And do something else with your money.
Okay.
That didn't work out because third quarter turned out to be a robust double-digit quarter across like for a lot of financial assets.
Right.
So like if somebody actually took that like saying and was like, I'm going to practice it this year, there was this huge missed opportunity so far in just 90 days looking back. So the sell in May, go away. And then the other thing that I it kind of dovetails into my first comment was we started September, the third month of the third quarter. They started that out, and historically, September is a pretty soft month, if not a down month for markets. Like historically, when you average everything out.
And why is that? Just because, or is there any?
I think there's a lot of quarter end rebalancing, people coming out of summer, trying to reposition for the fourth quarter. It could be a lot of different factors.
Okay.
But historically, September has not been the best month for stocks. Like if you look back over a long enough period, this year was the exact opposite.
Okay.
So All the things like you would say, like all the sayings, like they all went out the window. Uncertainty, yeah, it's still there, but market look beyond that. Markets across the board, not just the US, but markets across the board look beyond it. So I kind of look at it as the third quarter, it turned out to be a really big surprise in light of coming out of Q2 with a lot of tariff uncertainty. That was a nasty little move that we saw in March and April this year. I think the fact that it got walked back some, and then also it didn't really hit inflation as fast as people thought. I don't know if it's gone away, but I don't think that risk has gone away. It just didn't hit as fast and hard.
So when you're talking to clients, like, do they realize like that it was a good quarter, or, because there's so much noise? I'm just curious. Are people happy right now, or?
I wouldn't say, I don't know about happy. I think they were surprised, meaning surprised in a good way. Like, I think their expectations were a lot different than what really happened, meaning they had set the bar low and then it exceeded it. So they were like, oh, this is pretty good.
Okay.
My favorites, and like, I will say this, not everybody should do this, but there are a lot of clients that have worked with us so long, they kind of have like we're an old hat to them. And in the sense that they're like, okay, they got it. I'm not going to look. They don't want to, but that's their personality. They're just like, this isn't my thing.
Yeah.
And you go into a meeting with them and you start just kind of reviewing, hey, here's where the portfolio is. Here's how it's done. And you get some comments sometimes like, this is recent.
Yeah.
And they're like, oh, we thought we would have been negative this year. And I'm like, what news are you reading?
Yeah, I was going to say, like, what's influencing that? Like, why would they think that they were negative?
I won't answer.
Okay. It must be a political reason.
There's politics involved.
Okay, we will not touch politics.
Yeah, I won't touch politics.
With a very long pole.
Nope,
I
won't touch.
Moving on.
I won't touch politics, and then also, depending on where you get your financial news.
Okay.
There's a lot of dark financial news. There's a lot of overly optimistic financial news out there. It's just, what are you consuming? I don't know.
Okay.
But I will tell you it was politics.
Okay. I actually could predict that just by your face.
I try to avoid that topic like all at all costs.
Okay. Okay, what's your professional opinion about
of Q4?
Or what are you looking at? What are you guys talking about? What are you thinking about? Like, let's get inside your brain a little.
So interest rates are what really ends up happening with interest rates, and what does the Federal Reserve do? Like right now, it looks likely that there's 2 more cuts this year. Is it the right call? Don't know at this point, because we're kind of lacking some data right now. The other is really where the bite from tariffs and inflation come in. It might, like, meaning it should be, like, in theory, it should be inflationary. And we've started to see inflation. It was heading in the right direction. We've recently started to see it tick up again. It's like the market talks about this, but doesn't worry about it right now. And then the third thing that I would say, whether or not we are in an AI bubble, and that seems to be a huge topic, a headline every single day about the AI bubble, overvaluation. You could literally go to one source and they'll be like, I can justify current valuations based off growth, all this. You can go to another and be like, these things are the worst things ever. It'll never pay for itself. And I think it's really noisy to figure out where. Our approach has always been more so because we don't just concentrate on US markets or large US stocks. We have a lot of other things we do. Our approach has just been, we don't know, and we're going to own some of it, but we're not going to be 100% deep into it. I mean, from our standpoint, I don't think the recession is imminent at this point. Like if we're only talking about Q4, obviously we're a little behind on data right now, but it does not look like the economy is actually in contraction mode. I think what we're going to start to see over the next few quarters is probably an economy that speeds up a bit. It slows down a little bit, speeds up a little bit. It's almost like watching, a toddler run a mile. They'll sprint for a bit and then slow down and walk, sprint for a bit, slow down. But the recessions are inevitable. They will happen. We haven't had one. I mean, 2020 was a recession. It was 2 months. But I think what people need to recognize is by the time the recession actually gets called, you will have seen financial assets react months, if not 6 months in advance to that. And by the time you hear the NBER say we were in a recession, it's like we've probably been in one for 6 months at that point.
Yeah.
So it's like it's a little late to start tuning the portfolio for that announcement, but financial markets should and historically have always anticipated them. And then even when we're in one before they decide to say we're out of one, we're done.
Yeah.
Markets are recovering well before that announcement. So it's a risk, but I don't think it's high probability for the next 90 days.
Actually, I saw a creator last week who said the recession should have happened, but it was AI that staved it off.
I could get on board with that actually.
Mm-hmm. And then when the AI bubble pops, it's going to be bad.
It's going to depend. It depends. Like, does it have a waterfall effect, or does it have, meaning global, like everything? It like stresses the financial system, or does it stay sector specific? Like 2000, like the .com thing. If you think about it, the .com era, not everything across the globe fell all at once. It was predominantly isolated to those unprofitable tech companies that had extreme valuations. And yeah, it sucked because like a US stock index was down for 3 years back to back, and the drawdown was just painful. That was kind of a long sell-off in the market versus like a 2008 that just came in with a hammer right off the bat and did it all quickly. But you had other opportunities in other asset classes in that .com era because it was so isolated to those companies.
Yeah.
But I guess the real question is how pervasive and deep AI is, meaning overinvestment, if that's really what we're talking about here. But I think it still has a ways to run in a sense because investors have been patient with the build out. Mm-hmm. I don't know if it's going to all of a sudden trigger it in the third or fourth quarter.
Are there any other sectors that just get you excited?
I still think U.S. investors are, because of they use recency bias, meaning what's happened recently and carry it forward. I still think like people are probably drastically underweight having some diversification in international and emerging markets. I think they're looking at the last 15 years of returns and saying that this is going to repeat itself. And that's never a way to invest in a rearview mirror. But I think people are drastically underweight. They haven't rebalanced. They're probably over allocated to this AI trade. I mean, it can continue to run for a while. Momentum's strong, but when it comes out, I don't think they're going to get the timing right. So it's like you can diversify into other areas that are not just 100% focused on the mega cap US stock names at this point.
Before we close out, what was the greatest thing that happened in Q3 not pertaining to investments, finance, any of this? What's the greatest thing that happened?
I mean, I know what Pete would say is Taylor Swift got engaged, but
I was wondering if that was going to get brought up.
I don't know.
Maybe I missed the memo.
You didn't know she got engaged?
I know she got engaged. I don't live under a rock.
I was like, where?
I know. I was like, why does Pete care?
Just because I decided to throw him under the bus.
Oh, big Swiftie. Okay, now I got it.
Yeah. Oh yeah, there you go.
Oh no.
Now you bring up football, and she's gonna get mad.
I do love football.
Yeah, watch out.
Who do you like?
Who do I like?
Yeah.
The Chargers.
Okay, that's right.
They won in Brazil. That was pretty exciting.
Brian, when's the last time you went to a sporting event?
Friday night.
What was it?
The Mercury Aces game 4 of the WNBA finals.
Oh. So how much did those tickets run? Because I hear WNBA is getting, like, it just looks like it's getting so much more popular year after year.
So we had nice seats.
Ooh, big spender, Brian.
No, you know who bought them?
I know.
Katie bought them, and she wanted me to take her daughter to it because my daughter's like really into basketball and they like going together. But it was $200 a seat.
Okay.
Now with that, we got access to in the it was called the Footprint Center, but it's now getting renamed to something else. But at any rate, we got access to the club, so we had all our food.
Oh, that's
access to like buffets and stuff like that. That was nice. Like we didn't have to go up to the concession stands, but that was
nice.
included in the ticket.
Oh,
so
That's actually worth it.
Like pick an NBA game, like when you're 6 rows back, like nothing. Like it's a fraction of the cost. I don't know, women's basketball, like I've just like gotten exposed to it because of my daughter, but it's like they actually are like trying. It's like
they're actually trying. It's not really what you
I don't.
You guys are trying so hard.
No, but they're not like in it to showboat for themselves. Like if you think about it,
it's like old school basketball.
It's like old school. They're like they're trying. They're playing as a team. They're not like the all-star that goes out there and is like.
It's not.
I feel like the NBA.
The NBA has turned into that.
It's turned into that. They're in the old school version of it, and it's actually fun to watch. They're aggressive. It's just,
yeah.
I was like, I never thought I would like it. And yeah.
Look at you.
I actually
new
know.
Hobby.
I don't name.
Look at you have a new hobby.
Brian likes sports.
I just like going with my kid to it.
Oh, yeah.
Because she enjoys it. So
that's awesome.
It's better than sitting at home.
I like being at home.
I know you do. Watching football.
I do like watching football.
Do you scream at the TV?
Yes.
Do you think they can hear you on the other side?
No, I know they can't.
I always wonder, people are yelling at the TV and I'm like, the ref can't hear you. Why are you doing
Not
this?
like a ton. I'm not as like, I was making fun of Matt the other night too. And I was like, wait, but I do that. I guess I can't yell at him for yelling. He's a 49er fan and like their whole team is hurt right now.
Okay.
And I'm like, I guess I can't really make fun of him when I do the same thing.
For people that want to shout and comment and give a lot of love to this podcast, because they've been screaming the whole time, they're jumping out and wanting to
they're probably yelling at us on the thing. And they don't realize we can't hear them.
The thrilling market discussion of Q3. But if you want to hear more from our podcast, check it out on anywhere you can get your podcasts, Fearless Money Talks. You can also reach out to Brian and I on LinkedIn or go to our website, alberthargrove.com, or your favorite YouTube to see us live in video. Thank you.